it's the same old problem, isn't it? You've got bundles of regulatory capital, but when you've got negative deposits out there, very, very tough to turn that into NIMs and net interest income.
Look, the environment is tough from the bank's perspective, and all banks, and in fact many companies with very low rates. The economy is really suffering from the lockdown. So naturally, our clients' funding needs are lower and volumes are difficult to build. But the Dutch economy, where most of our businesses has been highly resilient, and we expect a strong rebound, really through the summer. And so we're well placed to capitalize on that rebound when it takes place.
Has your bank got the right strategy? And of course, I say your bank, it's only your bank for 18 more days, Clifford. But I think the FT called it late last year shrink to fit or shrink fit of the bank. Let me get this right, shrink fit, yes. And like you've missed out on some big opportunities by making the investment bank, for instance, a lot smaller. All that commodities trading could have been rather interesting in the last year as well. So is there an ambitious enough strategy over at ABN AMRO?
Yeah, you're referring to the decisions we took last year to exit corporate banking outside Northwest Europe, the likes of commodity banking and so on. And we've made really good progress shrinking that business and releasing capital, which is why we've got such very strong capital position. Our CET1 ratio is nearly 18%. So ABN AMRO, which is a bank with a proud history, wants to focus on Northwest Europe, where our core franchises are. And we've got great businesses here. We're a universal bank in the Netherlands. We also have substantial private banking operations in Germany, Belgium and France, and we want to broaden that out to deliver corporate banking services alongside the private bank in those core markets. So we've got our costs under control. As you see, our capital position is strong, so we're well placed to execute our strategy as the economy improves through this year.
What more can you tell us about the sell down of the assets then in the CIB businesses? Because I recall when we talked to you back when the announcement was made, I think, Q2, Q3, you said we're not going to indulge in a fire sale. But surely the atmosphere doesn't get any better, does it, for selling these kind of businesses? Can you tell us any more about what you're hoping to raise from these operations?
Yes, quite right. You're quite right. Last year we said we'd take our time to safeguard value, but also markets have been strong. We've seen oil prices and other commodity prices recovering. We're seeing good liquidity, so our clients are able to find financing elsewhere. And as a consequence, we've been able to wind down that business by nearly half already. We said critically that wind down, we wanted to be capital accretive, so we wanted to get capital out. And so far, after 6 months, it has been capital accretive. And we expect, we're looking to release up to 2.5 billion of capital from that business. And so far, so good. We'll make steady progress from here. And where we see opportunity to accelerate by, for example, selling our loans, we'll take those opportunities while safeguarding value for the bank.